So one of the most boring companies out of everyone up here. But hey, we do what we can. So I guess we can start the conversation with the CEX elephant in the room, which is our good friends at FTX, or our ex-good friends at FTX. What happened there, and how could that have been avoided? Is it a failure of the infrastructure, or is it a failure of governance? In any particular order, guys, just jump in.
Yeah, I'll probably take it first. I think there's two parts of that. Obviously, in hindsight, you can look at the governance issues and everything that's going on in there. But I mean, since we're on the topic about CEX versus DEX, I think for DEX, the cool thing about DEX is that the funds are not custodian, so you don't have to deposit funds to any centralized site. So with that, if you use, if FTX would be in a DEX, then you would not have an issue like that happening on the FTX itself. But on a centralized exchange part, that's why FTX got so big, because it's so user-friendly, it's so easy to use, so fast. So I see that's both ends there.
Caesar, on you, your comments, and I mean, possibly also give us a bit of an insight as to what prompted the meteoric growth of FTX in the first place, and how DEX can compare.
Sorry.
Sorry.
Continue.
Okay. Yeah. So similar question to you. Just what happened there? How could it have been avoided? But also, what prompted the growth of FTX compared to other DEXs?
Okay. I'm also not getting the I guess feedback. So it's in terms of in DX, in what we do, we're trying to sorry.
Just run with it, man.
So in terms of DX, I think like I mentioned earlier, we're trying to build something that's the difference between a CX and DX is that in CX there's always that familiarity with people who want to onboard on Web3, right? And that, I think in terms of Cake also and NAS, we're trying to build that something that we try to make it that it's something that's easy for the person or users to onboard in terms of in DeFi, or sorry, in the central exchange. Well, it's kind of a topic between DeFi and CeFi, but the decentralized exchange comes there after. I mean, I think this is a two-thing, decentralized exchange are basically exchange of tokens, and centralized exchange basically the off-ramp and an on-ramp, right? And for us, it's really something that we want to build, and I think it's part of the mass adoption that we want to do in XLD Finance, and I think that's an ecosystem that we have to build to have that mass adoption, and I think that hopefully that's.
No, spot on, man. I think it's the underlying truth, right? Is that the usability and the user experience is what's going to drive mass adoption, and that's just why decentralized finance hasn't picked up quite as much.
Correct,
right?
correct. Yeah. So, like I said, we are. I mean, it's part of technology and it's part of the product that we're building. We really want to have that same familiarity with when you're doing a central exchange inside the decentralized exchange ecosystem.
Gentlemen, a bit of a comment on, say, how could centralized exchanges still prevail in a world where decentralized exchanges essentially have all of the value add?
Yeah, I think really when I think about DEX versus like centralized exchanges, I feel like decentralized, whether it's centralized or decentralized, is perhaps less important. It's really about the trust factor, right? And the only reason why you want the decentralization is because you just don't want to get screwed over like what you did for FTX. But I feel like for centralized exchanges, clearly there's a need for transparency. There's a need to almost put yourself up voluntarily to be regulated. I mean, just like what Coinbase did, right? Like they are probably the only proper centralized exchange that's listed in a reputable stock exchange, and like I'm sure it incurs a huge amount of cost, right? Legal and all of that to just be publicly listed. But as a result, they are secure. They are considered trusted, right? So I really think it's about building that trust element that really needs to come out, whether you're talking about a centralized exchange or decentralized exchange, right? You come up with a DEX today, you still need to build the trust for people to come in to contribute to the liquidity pools.
And a view from CoinsPH?
Yeah, I think touching on the FTX point, right, I think it's what went wrong is just pure greed, right? Because they have so much money, they are running their own prop trading firm, they are running a hedge fund, basically just a hedge fund model. Right. What SBF promised everyone was, look, we are a safe and secure centralized exchanges, And why people bought into that is because, I mean, for all those who are keeping track with this space, right? I mean, his parents are closely related to some of like the politicians, right? It said that SBF actually contributed to Biden's campaign as well. So of course, with such news going around, such factual statements and stuff like that, naturally people are inclined to actually believe in what SBF and his team were doing. And then of course, I mean, right in Singapore as well, look at Temasek and GIC, right? They themselves have stakes in FTX, or had stakes in FTX. But I think at this point in time, you know, whether people should trust like centralized exchanges or decentralized exchanges, it's really up to the individuals to do their own due diligence and research, right? The reason why a lot of these DEXs are actually gaining popularity as well is because of this degenerate factor, right? Personally, I'm quite young. I know a lot of people around my age who love to dabble in like new decentralized exchanges, right? Not just because of the fact that they are degenerate, they are good, you know, there's a token, there's an airdrop, but rather it's more of the UI, UX, the speed of transactions, and like what was earlier pointed out, the usability of it all.
I guess due diligence is always one of the biggest factors, right? And as a user, retail or otherwise, it's not really in our nature to look into the back end of any system. And it becomes a lot more complicated when you're dealing with a decentralized exchange because most people aren't developers, most people can't read code. So I guess what are the hurdles other than, you know, that ease of use that you face when you're trying to grow as a decentralized exchange?
Let me take that. So I'm going to answer a bit from the centralized point of view first. We're all in this space where we have this really a privilege that the pipe that all we're doing here in this space is very transparent. So when we send crypto from one entity to the other or one party to the other, you can see where all this is going through, what other third parties are going through. Whereas on the traditional finance, you can't do that. Like even if a bank wants to do that, the other banks were not open to disclosing is it a centralized party or not. So you can't track all the way. Whereas in this space that we're in, we can actually see that. So for the revolution that DEX brings is that all of this is very open, that you can track, like if it goes to multiple trading pairs and multiple different parties and all these trades, you can actually see what's happening in all these transactions and track it all the way and how much you're going to get. So everything's very, very transparent. So I'm bringing it over to the centralized part. So we're all in this space where it's very, very open, very transparent, so make use of that. So but at Cake, when we started in 2019, I mean, all along, like it's in blockchain, when Satoshi first created it, it's all about transparency. When you send coins from one another, you want to be able to track where it goes, where it's been, and all that. So at Cake, we always provide proof of transparency all the way from 2019 on the first day when we first launched. But then, like, at that time, a lot of people do not really care about transparency. It's just like, what's the yield? That side's giving more yield, so let's go to that side. But now we know that transparency is everything, so now everyone wants transparency. So make use of this cool thing that we have, a transparent pipe, and provide transparency to your customers. So I would urge everyone in the space, centralized or decentralized, or anything that you do in the space, make use of that cool feature that we have.
So I want to offer a slightly contrasting view to that. I agree that transparency is valuable, especially when you consider what happened to FTX. But I'll say sometimes there's still some value in the lack of transparency in centralized exchange, especially when I don't want the whole world to know how I'm spending my money. So I'll give you a very simple example, right? I'm a VC. I invest in early stage Web3 projects. Sometimes the projects say they launch an NFT collection, right? I might choose to participate with my own capital, my own money, and I might have my own trading goals, right? The problem is if all of my transactions are made transparent and public, the moment I sell any of my holdings, whether it's NFTs or tokens, it could potentially be seen as a lack of support, right? And people are like, oh, you know, you don't believe in the company, you're dumping the tokens. But it's like, firstly, it's my money, and secondly, it's like, it's, you know, so what? If I'm an investor, I should never ever sell. Like, then how do you even be an investor? So, I mean, Tornado Cash is down, so we can't break the chain. And so essentially, sometimes just breaking that link of where money is for certain situations, I think there's still a use case for that. So I do send my money through centralized exchanges just to break the link and then take it out from another wallet.
Can I add a bit on that? Yeah, I think we're aligned here on that. Like, transparency doesn't mean it's trackable to where it's coming from, But I think if you use any centralized exchange or any bank, for instance, you want to know for sure that the money is there in the bank itself. I mean, the bank would, I would disagree if any banks or any centralized sites start to say, the John is going to have $1 million here and then Alice is $2 million. We're not going to, that would not be a good practice. But the good practice would be to provide two things: proof of transparency and proof of solvency. So you know exactly what's the liability for that site. You can track it yourself. You can put it, you are able to check yourself that your liability for that site is there, is accounted for. Obviously, you cannot check for others, but you can check for yourself that it's accounted for, and then check that it is actually on the blockchain itself. It's fully solvent. So that's actually what we want in this space. And we are in a space where we can do that. No other space can do that. Yeah, aligned there. Thanks.
Yeah, so I'm just gonna answer it. So I think in terms of hurdles of in terms of decentralized exchange, I mean we are trying to say transparency and all that, but I think in the real usage in the real world, I think we should grow more projects and ecosystem where it's acceptable, right? I think it's the medium. I mean, looking back when Web 2, well, in terms of Web 2 payment, digital payments, I mean, we now have e-wallets and everything, and to be able to do that, you need to have acceptance in retail or any entity, right? I think we need to build more of these ecosystems just so that, you know, to get into the decentralized exchange setup, because all these things after they receive the payments or you need to do exchange, maybe another form of funds or currency they want, right? So I think, like I said, in terms of our projects, we're trying to build these things so that, you know, more acceptable channels, and also to drive the adoption there, because once a token grows, or I mean, I think tokens play part on building this ecosystem, right? You have to make them, okay, why are you doing this token? Because you can use it here, you can use it there. And like I said, it's been like a Web 2 issue before, right? Adopting digital payments. So, and once all in retail, once all those digital payments, the credit cards, machines are there, then I think that's a hurdle that we can all be like, oh, we're past that now. We look at the transparency. I mean, of course, the transparency is there. I mean, that is the reason why the blockchain is there, right? So the transactions there. So that's my take on this one, the hurdles.
Yeah, it's a bit like what PayPal used to do in the Web 2 world, right? No one trusted online payments until PayPal came up, and I was like, everything's fine. It's trusting, right? I guess on the transparency note, because you guys hit on that pretty hard, and I appreciate that, there are a lot of tools out there now. There are a lot of companies, I mean, TRM Labs, Citrix, Chainalysis, just to name a few, that make it very easy to track back the past transactions, what's happened, and where things are going. Do you think that's the answer right there, is to make it easily visualizable, where transactions were, where they went, a bit like what Whale Watcher does on Twitter, make sure that if large amounts of funds got pulled out of an exchange, people get alerted and notified?
Yeah, I mean, if I've heard your question correctly, right? So I think it's not just about Chainalysis or any other platforms that you can track like transactions, right? But there are actually like free tools such as Etherscan or like any other Chain Explorer that is a very powerful tool that you can actually track all these transactions. But right now, in terms of like a centralized exchange doing their transactions on the blockchain network, there is no hard and fast way or proper way for auditors to actually, you know, really go and screen all these transactions and make sure that they tally with what the exchange has been doing. So from a centralized exchange point of view, right, it's the onus lies on the exchange itself to ensure that the bookkeeping is done properly, right? So that, you know, in the case of like any regulators, anyone who is requesting for, you know, audited financial statements, proof of transactions on the blockchain, this can be easily provided, right? And that is why, you know, as an exchange in Philippines, right, we are fully licensed by the BSP, the Central Bank of Philippines. So this allows us to actually operate seamlessly, right, to work closely with the regulators. And at any point in time when we want to come up with new initiatives, new products, right, we can be accountable to not just the regulators, but the users as well.
Yeah, actually, that's a really good point about being regulated, because I think the conversation for centralized versus decentralized exchange is easy to have when it's retail, when you are managing your own money, right? But when it comes towards institutional money, I mean, I'm a single LP fund, right? And my LP is a Tokyo-listed corporation that has to go through. So I go through 2 audits, right? I need to go through an audit in Singapore. I need to go through an audit in Tokyo. And they are like, there's no way we're going to let you do your transactions via DEX unless there's no option on centralized exchange, right? And then centralized exchange, they'll say, okay, who will the auditors approve in terms of the partners you work with. So even though I know I can get a much better price when I do my token swaps, I do my on-ramp, my off-ramp through a DEX, it's really like I have no choice. I just have to go with centralized just because that's what risk, audit, finance they are comfortable with. So I think what will be interesting to see is how can we build that confidence, that trust across the decentralized part.
I'm gonna add a bit of that. So I think the audit and the regulation doesn't really solve problem here because they're there from the archaic world of finance. Like when everything it's opaque, how do you make sure that they're safe? So you do audits. Like are you solvent? Are you solvent? Are you okay? Give me your proof. If it's not solvent at a point in time, I mean, after audit, if it's not solvent, it's too late. You can't do anything. Whereas in this world of crypto and blockchain and DeFi and DEXs, everything can be audited on your own. If you can read smart contracts, you can do that. If you cannot read smart contracts, you can hire an expert to do that for you. If you cannot hire an expert to do that for you, try out a small amount. Try out $1. See where the fund goes, and then does it come back to you in $1 worth of different currency, and then try a bigger amount. So you can actually audit all these things yourself, and the archaic world of auditing and regulatory, making sure that things are safe. I mean, yeah, at Cake we do that as well. It's because of what you're saying. We want to be acceptable by institutions, by banks, because we have to do that. I mean, it's a good thing that we do that. But then I just want to say that in this world of crypto, in this world of blockchain, we can do that ourselves as well. So do not have to depend on that. Like just like think about why blockchain, why Bitcoin was invented in the first place. It's to disrupt banks. It's to make it better finance that you can actually trust yourself with, and you don't have to trust anyone. You don't have to trust auditor. You don't have to trust regulator. You don't have to trust the centralized side, because you can verify and check yourself.
I love that. Coming from an auditing company, I love to hear this stuff. No, it's very true. And like you said, I mean, the point-in-time snapshots of current reserves, current losses, current profits, whatever else, in crypto, they're exactly that. They're snapshots. They're points in time. If you do it quarterly, if you do it weekly, if you do it daily or once a year, they're snapshots, which is a shame because we're sitting on an infrastructure that allows you to do this technically streaming 24/7. But you have to learn how to do it, right? Which is where these tools come in. Now, speaking of disrupting the traditional financial sector where things are still done this way, do you think we can live in a world without traditional banks? Because for now, even when it comes to decentralized exchanges, you still need to buy that crypto somewhere, and that usually goes through a credit card, through a centralized exchange, and then you load up your DeFi wallet.
In my opinion, I think that my answer to that is that we're going to see a world where both exist. Will DEX completely take over? Will DeFi completely take over? Like all finance, we're not going to see banks anymore. We'll only see DeFi. Yeah, in my dream, I would wish that would happen, but it's not going to happen because UX, because of it's not going to be so easy to use DEXs and all that. So centralized sites will still be there. And centralized sites is the bridge between the hard part, the technical part of the DEXs and DeFi to make it simple and easy to use. So I'm going to see this pattern continue over the next, I don't know, like a decade or 2 decades moving forward. And thereafter, I'm not sure, but I see both sides going to coexist. So both solve different problems. One is on the settlement issue on the DEXs. I see DEX going to help a lot on the settlement, and then the centralized part will help a lot on the final mile user acquisition, user interaction, so make it really simple to use. So all that. So that's also why we founded Cake DeFi, to make all this DeFi complicated stuff simple enough for end user to use. So we bring the complicated DeFi world to more of a centralized service where you can trust, you can verify, you can check, and very simple for you to use.
Fantastic.
Yeah, and I'll say this, I completely agree that both will exist because everyone loves decentralization until you lose your money. Then you want a bank on the door, you want someone to call, you want someone to shout at, and you want the government to intervene and get your money back. So we kind of saw that happen in the whole FTX. So what's interesting, for example, is in Japan itself, actually the rules are such that the separation and isolation of funds is very clear-cut. Right, so most of FTX Japan customers are going to actually get back their money, but I think it just really points back to, we in a world where we are flush with cash, making money, we love decentralization. We don't want the government because they're going to collect taxes on us. But then in a time when FTX happens, you wish that there's someone there to intervene and step in for you.
Yeah, I just want to add on that point, right? So I do agree with what both of them have said, but I think we see that in a lot of like emerging markets or like developing countries, right? Majority of the population are still underbanked, or unbanked, right? So of course, if let's say these people do not have access to traditional banking services, then they start to look at alternative payment methods, e-wallets, right? I think one such country I can point out is the Philippines, because that's where our main operations are at. So of course we see that the proliferation of like digital payment solutions such as mobile wallets. In Philippines we have GCash, Maya, and CoinsPH itself. So I wouldn't say that we necessarily need both decentralized platforms or apps and banks to coexist together, right? It's more of how people can start to deviate away from the banks, but yet still get access to these decentralized services as well.
Yeah. So on that one, in terms of I think it's a user experience versus technology, right? In terms of banks, I think what's what you said, in the Philippines, when we were adopting the digital payment, I think that's it, when people. My bottom line is I want to say education. Sorry, so it's education, right? People has to know how to use this, and to get to that area where like us guys who are tech in Web3's thing, we understand these things. But for people who's just ordinary, especially in countries that there's a low education on what is decentralized, what is DeFi, what does it do for me. I think this will continue being, the centralized, the banks will still continue. They might adopt their own blockchain, which is closed blockchain loop in them, but happening with the decentralized stuff, I think that's, it will take some time to get there, right? Because they also want to be, you were right in accountability, right? If everybody's happy when there's, you're getting good stuff, when bad things happen, they have to find someone who can, hey, why is this not happening? Why did this happen? Even myself, when I started, I was like, okay, I see my transactions happening, but if it didn't push through, who do I call? Who do I, I think this is the thing. So in terms of the topic, the TradFi will still continue being there until, I think all these things that we can cover in terms of making the users have that feeling of, okay, I'm confident that whatever I use, maybe in the future will be like, there's no more, in terms of user, DeFi, CeFi might be just merged together, and I think this is the thing that will happen,
Yeah, DeFi and CeFi might be a bit of a thin comparison, but it's always been, I guess, an ecosystem play in a sense where the biggest competitors to centralized exchanges weren't decentralized exchanges, they were banks. Traditional banks or traditional financial institutions which could offer the exact same services but just flicking a bit of a switch, rebuilding part of their infrastructure, and now you can shout at someone if your crypto doesn't go through, right?
Yeah, I'm not sure if I heard the question, so the echo. On the DEX part, I think it's gonna, like right now, a lot of transactions happening on a centralized exchange, and DEX, it's still hard to use. It's still like super clunky, and so the downside of DEX today it's expensive to use because you have to pay a fee for every single transaction. Usually it's not order book based. If it's order book based, it's super slow. If it's not order book based, then you're basically making a market trade all the time, because that's what AMM is all about, automated market maker. So you're basically making market trades all the time. And order book, it's actually very important because like for a trader, you want to be able to like set a price, buy price and sell price. You want to be able to do that. And DEX is still kind of bad at that today. But then I also want to point out that the piece of the puzzles are all there, because we can have DEX. We actually we don't need to submit every single order book change on chain, because we don't need to. Like the cryptography part allow you to sign price changes, order book changes in a cryptographic manner that you can accept it and accept that as a truth. You do not have to commit it to the blockchain. So it's actually possible to do what centralized exchange is doing today, or what banks are doing today, or what stock exchanges are doing today, to allow trades to happen in sub-millisecond, and I can see that happening entirely on the DEX itself. And you don't have to deposit money to a DEX, you just have to pledge that your fund, here's my fund, you have my pledge, and I can submit all the price changes to the DEX in a sub-millisecond way. I think this can happen on DEX. All the pieces of puzzles out there. Someone need to build that. So yeah, I think over time, DEX will then overtake CEX, centralized exchange, as the settlement platform, and then centralized exchange will now play a role of more of a user-facing side because DEX is still kind of complex and all that. So I would see DEX overtaking centralized exchange volume in maybe a year or so. Big prediction there.
Big prediction. So which one of you guys is building this?
Yeah, I wouldn't say that one would take over the other or one would definitely like front run the other, right? I think it's back to using this point about how centralized exchanges actually serve as a bridge from the traditional world Web 2 space into the decentralized world, like the Web 3 space, right? And then touching back on the point of like your order book, right? What really makes centralized exchanges really nice to is really the liquidity. There's depth in the order book, right? Your orders, your limit orders, they match quickly because there's liquidity there, right? But right now, I think the problem with DEXs, right? One of the main problems, the issue is the liquidity. There's not enough depth on like these AMMs, right? And on top of that, it's like your slippage as well as impermanent losses on these like decentralized protocols. But that being said, given how FTX fell from grace, right, and then the recent SEC, claims against like Paxos, and then forcing them to actually stop issuing like BUSD, right? We actually see a lot of these like decentralized tokens as well as coins like Curve, Curve Finance, looking at how their tokens pump. This shows that there's a belief in these decentralized platforms as well as decentralized exchanges. And then on top of that, another issue with like these decentralized exchanges or platforms, it's the on and off ramping, right? Right now, you look at how PayPal has partnered with like MetaMask, right? So this allows users in the real world to actually onboard their assets into like the decentralized world very quickly. But what if you want to like off ramp into, let's say, a bank? Then these decentralized exchanges have to actually do their KYBs with these banks that they want to partner with, just so that they can provide these payment rails for users to actually off-ramp back into their accounts and spend in the physical world. So I would say that as to how long more will DEX replace centralized exchanges, I have no idea, right? No one can really tell. But whether it will catch up quickly, that's for sure.
Yeah, I think on last census it was about 95% of crypto volume goes through centralized exchanges versus 5% on decentralized. It's embarrassingly low.
I would say it's more 2/3 on centralized and 1/3 on DEX today. I would think so. Yeah, there's some. I think the block. I think the side tracks that. Yeah, so I do see it overtaking kind of soon.
Yeah, just to add on that, I think like you mentioned that we're at the stage right now building all these things. We know all the pieces are there. I think it's a matter of stitching them all together, and then coming back and saying, hey, in decentralized exchange, we have also what the banks have, but on the other hand, again, users who wants to go there, they have to go through central exchange, and this is because one, there's a governing body or entity that would say, hey, if you want to do this, you have to go through this, which is the KYC, the AMLA stuff, and for users to go on the decentralized part, they really have to go through the centralized part because at the end of that money, the fiat is lost. Again, there will, So I think that's, like I said, I think there's some, like you said, somebody has to build, and I think as a community, as Web3 developers and technology, that's what we have to build too. And I think we all have the same mission, right? To have that mass adoption in terms of, to have that entry, that difficult entry, which my experience when I didn't even know how to use MetaMask at the start, and like, how do I put my funds here? And I was like, how do I put my local currency on MetaMask? And I was like, no, that's not the way. And I was like, okay, I don't understand. How do we do this? And then you go to and during that time it was a CoinsPH. I had a CoinsPH wallet. I had to go there, like, deposit to your bank account. But why would I need to go to bank account? I thought it was like decentralized. All tokens, right? And then, yes, but you need the money. So, and I used that, and slowly I understood, okay, so there is no way that we can put funds in the decentralized space until we pass to the centralized space. So I think moving forward, I think there are a lot of companies building this, trying to patch all these together. And once we have that built out, I think there's a possibility of really going, hey, we can do what you can do in terms of cost and everything. we are building the layer 2s and the roll-ups and all those kind of things. And I'm sure Ethereum, which is expensive in terms of gas fee, Vitalik might be trying to do some stuff there to make it lower, right? Once all the cost is lower, then I think we can say, hey, we can do whatever centralized exchange can do, we can do in decentralized.
Very fair, very fair. I think we've covered a lot of the currency aspect and the digitally native products, at least on blockchain. What I'm curious about now, though, is what happens when you start introducing tokens that are not digitally native. I mean, security tokens, asset-backed tokens, all of these tokens that currently, under the current regulation in Singapore and most of the world, require you to do a KYC, KYB, and are limited to accredited investors only. These would be the best products to have in a decentralized exchange, right? So you can stake your house, so you can stake your assets, so you can collateralize them and take a loan out against them. Where does that leave decentralized exchanges now?
I'll take that. I think that's where it's a little bit like the same paradigm with the on-ramp, off-ramp with fiat and decentralized world. So we're taking real-world things and trying to put it on chain. So usually you need a centralized party to basically honor that token represents the centralized, the real-world asset, and then vice versa. So so that part can bring in there. So I do see that when DEXs get to the point where there's this network effect comes in where, let's say 95% of the trade volume is going to happen on the DEX. And then we're going to see all these centralized services popping up to say, okay, now we're a real estate tokenization service. So bring your real estate here, bring your house here. We're going to tokenize it for you, put it on the DEX, and you can allow your house to be tokenized and be traded there. And once someone gathers the full, let's say tokenized, and someone get the full one of your house, you can redeem it from us. So I think once you get that network effect of the DEX, we're going to see some of these entities that pop up and make that happen.
I mean, for now, I'm seeing more regulatory hurdles on who you can even sell these things to, right? I mean, accredited investors only in Singapore when it comes to security tokens. Thoughts, gentlemen, on real-life assets on decentralized exchanges?
So what was the question?
Real-life assets on decentralized exchanges. So you hit it on the head, but anyone else?
No, I think that it's interesting, right? Because a lot of these real life assets are still governed by like exactly what you mentioned. Right? You need to do your KYC, you need to do your KYB. So one of the models that we as a firm are interested in, it's especially lending, right? How do you make lending more efficient? You don't need to do over collateralization. You can put an asset there. But if you look at a lot of lending protocols, Centrifuge, Goldfinch, it still requires some level of KYC, and US people are not allowed just because it kind of crosses the law of security. So I think we are still on the way there. We're definitely not there yet. And I think a lot of regulators themselves are trying to figure out how do they govern this, right? It's one thing to launch the regulation. It's another thing to police it, especially in a decentralized world. So I think there's still this bridge, there's still this gap. Of course, that means there are arbitrage opportunities to build protocols and kind of capture it. But I think as more clarity comes, I think then the way forward becomes clearer for everyone too.
Yeah, so in terms of real life assets in the digital world, I would say that we have already taken a very huge step forward, right? Just look at NFTs, like how are they different from like real life paintings, right? They're just written on a smart contract and then up on the blockchain. And we have seen quite a few number of like decentralized protocols that actually offer your collaterals for these like art pieces. So just imagine putting up your monkey for stable coins, and then so that you can use the stable coins to generate yield, or speculate or hedge on other decentralized exchanges, in order to suit like your financial needs.